we have a lot of great deep experience from Kim and Phil here, who has a lot of experience in scaling small businesses to running global enterprises. So starting off with Kim, you've worked across a couple really diverse industries, many diverse industries. What is the common thread that you normally see in terms of financial challenges?
So I've spent over 22 years working in various industries, like you had said, that I've spent time in, multi-unit retail, technology, manufacturing, logistics management, freight forwarding, and then more recently with a large CPG company in their veterinary health division. So spent a lot of time there, had various roles, finance and accounting, also led an IT function, global IT function. And, I'd say when it comes down to small to medium-sized businesses, taking that experience and applying it to an enterprise, or applying it from an enterprise to a small business, there's a lot of similarities. There's a lot of pain points that just don't get addressed, just because I think a lot of businesses really are focused on now and surviving. And, I think with that, a lot of what we used to call technical debt, process debt in the enterprise corporate world, it exists in small to medium-sized businesses. For instance, hiring a bookkeeper, right? Really low cost, gets you what you need. Transactions get recorded. However, usually that results in lower quality, right? Accounting, lower quality reporting. And, sometimes you don't even get your financial statements until the month after, when you should be getting them very timely, like within the first week, possibly week and a half after the books are closed for a month end.
With Phil, you've started at one of the big four accounting firms, moved into hospitality. What surprised you the most about the difference between enterprise and small business finances?
Well, with enterprise, you have like more support. You have different departments that are responsible for different roles, whether it's accounting, finance, marketing, and so on. But with small business, it depends on how many owners are involved. But in my experience, I was the only owner per se, so a lot of that stuff fell on my shoulders. So that's kind of the biggest difference. Like, you're wearing a lot of hats as a small business owner. You got to take care of HR functions. You got to hire people, interview people. You try to take care of your books and records, or outsource that to a bookkeeper. You are the person that does the marketing, for your business. So it's a lot. It's a lot different. I would say the big difference is just the fact that you don't have different layers of support when you're with an enterprise versus if you're a small business.
It's safe to say that you both have a very unique perspective, and you've seen the sophisticated enterprise world, and of course going down into the SMB world as well. And today what we're going to focus on is that SMB space, like where you say businesses are operating in what you call good enough mode, and let's really dig into what that actually means. So you mentioned that for good enough in your newsletter, that good enough financial management isn't just efficient, it's a direct threat to long-term profitability and valuation. So to Phil, let's start here. What does good enough actually look like? When you walk into a business that's operating that way, what are you seeing?
From what I've experienced, good enough is basically, it's more like a compliance thing. I think when it comes to like bookkeeping, getting your taxes done, small businesses kind of look at it as like, I'm trying to be compliant, get my taxes done on time. They don't really use that as a tool, like to basically like a management tool. They're not using it to help strategize for down the road. It's something that they just take care of after the fact, after all those transactions have happened already in the past, and they're just playing catch up. And so essentially, from my experience, that's kind of what it looks like being good enough. The cost of being good enough, like, let's just get the books and records in order. let's file the taxes.
You mentioned in the newsletter that many SMB owners treat the finance as a quote necessary evil. Why do you think that mindset exists today?
It's usually kind of like, you're so like, as a business owner, you're so involved in operations and the day to day. It's kind of like the last thing on the list of that long laundry list of things you have to get done. It's like something you just put off, I feel like, because you're worried about, like Kim said, you're worried about today, now, so those kind of things are kind of like low priority, when in fact it should be a higher priority, because obviously if your books and records are in order, you can use that. If it's timely, you can use it as a management tool to help strategize. Like, if you spent too much money on one line item, how do I decrease that, right? But you wouldn't know that if your books were up to date.
Kim, in the newsletter, you say business owners should focus on driving strategy and serving customers, not drowning in the bookkeeping portion that Phil is mentioning here. So, what can you walk us through what actually happens when they outsource it very cheaply and what kind of problems it creates?
Yeah, I mean, I'll relate a few topics together. The whole necessary evil thing, right? Like, you have to do it. You have to comply. You have to report. You have to pay your taxes. The piece that doesn't happen is and through this process, you're just and I need to hire somebody to help me manage my books, right? Check. I need to hire somebody to do my taxes. Check. So what ends up happening is you have this fragmented support. And the fragmented support, there really isn't anybody kind of just overseeing it on what it needs to be. And like the example I used about financial reporting not occurring on time. A lot of small business owners or medium-sized businesses even are so focused on growing the top line, they don't look at profitability. And profitability is really important. The question could be, I need to hire somebody. So can you afford to hire them? Like, sure, I'm making money. I can afford to hire them. But are you doing it in a healthy way, right? And there's a lot of relatability there, especially working in multi-unit retail. I think a lot of what we did as an organization at that time was work on, building financial acumen, business acumen. Like, you cannot afford to do this because, and if you want to afford to do that, you can do this, right? So there's different levers, drivers that you can take to be able to action on that. But if you don't get your basics in, you don't get your reporting done on time, you don't get it done accurately, you're really just making a decision based off of 50% or even less information that you have. So, for small to medium-sized businesses, it's very important that you have as much information as you can to make the right decision, because one bad hire can easily, be devastating to those companies.
As you both are mentioning that quote good enough, can any of y'all share a real scenario when you encountered where good enough became really bad?
I can jump on that one. So I mean, just from my experience with working with clients, because they don't have any sort of like accounting structure, the focus is just sales. A lot of times it's just sales. And then what does their bank balance look like, right? I mean, at the given time. But the cost of good enough, I mean, a scenario is like, if you're not really paying attention to the other side, like costs, and you're not like keeping up to, if you don't have any KPIs in place, like, what is my food cost, my alcohol cost supposed to look like? If you don't pay attention to that and you're off by like, let's say 2, 3, 4%, over a course of a year, I mean, that just adds up really fast. And the cost of that is probably even more than hiring the right person to monitor, your books and records and help you plan strategically, for the future.
As small businesses begin to grow, or any business begins to grow, you need to look at historically, have I done well, right? And, we've had clients, specifically, there's a few that I'm working with right now, that they don't really understand certain financial concepts. And in a future newsletter, we're going to talk about this concept called percent of sales. And as you're looking through that in your P&L, like, how well did I do? Was I more efficient? Did I get leverage for my top line? Did I make enough margin, contribution margin, to be able to carry costs down or carry profit down to be able to afford different things. And, did I have a good month or did I have a bad month? And, a more recent example is one that I was working with a client yesterday that, he had his best December in like 3 years. And he wouldn't have known that. Right? Had we not gotten his books closed in a timely manner, we hadn't shared kind of insight on his P&L and how well he's doing. So it's a good thing. It's a good win to have, and I think with small businesses, medium-sized businesses, every win matters and helps motivate you to the next client, next customer, of which we help support and drive.
And you both mentioned about like the profitability that comes with this and like the actual cost of it. So the newsletter mentions small percentage differences across thousands of transactions can translate to thousands of dollars. Can any of y'all break that down, and what are we actually talking about?
Yeah, I mean, it just kind of like I was talking about when it comes to like cost of goods sold, purchases on like actual direct costs, just like small percentages, if that's out of whack, I mean, it's just going to compound. And especially depending on the size of your business and how much volume and sales you do. Obviously, if you're a $2 million revenue business, obviously 2, 3, 4% over the course of a year. I mean, that's a lot of money, right? Right off the bat. I mean, you're basically bleeding money without even knowing it, Yeah. That could be avoided so easily just by having proper accounting, basically investing in proper accounting and finance within your business, having timely reporting, you got to have monthly reporting at the very least. Without that, like how do you know how you're performing on a monthly basis? And the thing with most small and mid-sized businesses, a lot of them don't have monthly reporting. It's always like they're playing catch up the whole time. And then maybe once they're, at the end of the year into the following year, when it's tax time, that's when they realize, that things went wrong during the course of the previous year, but it's already too late. It could have been prevented, but it wasn't because they didn't have, proper timely reporting and accounting. It's plain and simple.
And that I'd add, we have a client where, actually Phil and I worked on this client, where we updated his pricing on everything he's selling. And, each one of those sales, I mean, he has thousands of sales, thousands of transactions, incremental, dollar here, 50 cents there, right? It's like death by 1,000 cuts if you don't actually make those changes. It's also improvement by 1,000 cuts when you do, and you do it right. So that's a good example of like, those transactions, even the small tweaks will add. And in this case, it really helped his sales per transaction and improved it by, I think I would say, what was it, Phil, 25%, like almost like $30 per transaction.
30%, yeah, it was about 30. And that was, and he was only with us for, at that point in time, like maybe a couple of months. And just by, basically like advising him to do that, and he followed through, basically made a huge change, to his bottom line.
So is this all about just overpaying vendors, or are there other ways that money leaks out?
I wouldn't say it's overpaying vendors. I think if you go back to the example of a tax practitioner and a bookkeeper, it's fragmented, right? There's no person really leading it. The business owner is so focused on driving the top line, without somebody just kind of steering the ship, right? We have what's called leadership as a service, which is kind of like fractional work, where we support a business. We become basically their go-to person to help them with all kinds of different guidance, financially, strategy-wise. And what that ends up doing is it gives like one view, right? One direction to marry up and match up with the business owner, and the business owners can stay focused on, new client acquisition, new customer acquisition, and then we can help support with profitability. And then in many cases, we also are tapped to discuss, okay, should I invest in this? Will I get an ROI on this strategy. So it ends up working out really well, and it just simplifies the overall business model for our clients.
Because you're talking about the overall picture, and we're just so the business owners are so focused on, okay, what do I have to do right now? The overarching themes of like the driving the everyday operations. So in your newsletter, you mentioned that if you are looking at last quarter's results, you're driving your business using your review mirror a quarter at a time. So talk to me about the timeliness, what's acceptable, and what's actually dangerous and could serve as a challenge.
Once you get the basics in, right, you have the rhythm of review. You're looking at your financials on a monthly basis. You understand the history. So then after that, the natural progression is to, okay, how am I going to do next month? How am I going to do next quarter? And in some cases, for some of our clients, it's like, okay, how am I going to do next week? So without that foundation of just understanding the past and the history, it's hard to make assumptions about the future. And I think once you get there, you can actually start building out like, okay, this is what I need to do. This is how many customers I need. This is how many transactions I need. You have those KPIs that Phil mentioned, key performance indicators, that help drive what you're going to do next, right? So then you can start thinking through, okay, I need to have X number of customers, or I need to produce X amount of product by this date and ensure they all get delivered by this time. So then you start thinking about things not only, quarterly, but you start thinking about that monthly, daily, annually. And that's where a lot of business owners really struggle, is they don't get to that state where they start thinking about the future and they don't have a team that can help operate the day-to-day. So that's, I don't know, Phil, I mean, did that cover most of it, or anything else?
Yeah, that covers a good chunk of it. And it's all about having structure, some sort of sense of structure when it comes to finance and accounting. And like Kim was saying, like you have to have like some sort of like plan, quarterly, monthly, weekly. And then you got to think about like, it depends on the type of industry. It could be seasonal, you have to make adjustments for that as well. So the big thing is like, the more you can like analyze what happened in the past, the better, because you learn from it. You learn what worked, what didn't work for your business. So that's why it's really important to like change your mindset when it comes to accounting and finance. It's not all about it's not a chore, it's not like a chore of like getting the books, all like up to date, balance to the bank, get taxes filed. It goes beyond that. Like, we gotta like rethink how accounting and finance works for SMB, businesses. Like they have to rethink how it works. And the more they review past data, what happens, then they can rethink on how they can, like move forward with their business in a positive way.
Can you share one of those real life examples of a great plan that worked out really well for a business?
Yeah, I mean, one of our clients, essentially, they're in the venue space, and they really didn't have any key performance indicators. They just looked at sales, and that was it. They didn't really have any plans. So what we did is, we basically created a spreadsheet, that had like their sales, not only sales, but like how many tickets were sold, what their food and beverage, sales were. And then we came up with these like, for each event, this is what it averaged out to, food and beverage sales per ticket holder and so on. So we came up with these metrics, and we had these goals, like let's get to X amount of dollars per person. Like how can we get to that point, right? To increase your revenues. So that's kind of like one, small example of how like if you're on top of your past data, and you have these KPIs in place and you're striving towards that. I mean, that's the way you use, past transactions. That's how you work with your accounting, that's the way to do it, to move forward. Don't think about the past only when it, don't do reports from the past and that's it. You got to be proactive in the whole, approach.
What is the minimum standard that every SMB should demand for their financial function?
I mean, essentially, you need to have your reporting timely, right? you should know within the first 5 to 7 business days how you performed last month. I mean, that's basic, right? And then that helps support what your tax reporting, potential tax strategy, it helps become input into that. I mean, that's like basic foundation. And then like the companies are doing it better, who are leveling up to that next stage. They have one unified vision, right? So from an accounting standpoint, a tax standpoint, and then they have more strategic foresight into actually doing things intentionally into the future rather than hoping their business grows. So that's kind of the natural progression that we've seen.
Yeah, I think if you're a growing company, let's say your sales is stagnant, but if you're trying to grow, I mean, you have to have this structure in place, if you want to take your business to the next level. So that's kind of how I view it. And I think a lot of so I feel like smaller businesses, they have issues growing because they don't utilize, and have timely reporting. And without that, like, how can you really grow, right, as a company if you don't have that at least in place? So that's why, like, it's important for, businesses that don't have this kind of structure in place, when it comes to accounting and finance. You have to have it timely. You have to have reports timely. They got to be meaningful, not out of the box, style. It's got to be meaningful to your business. And that's why, like, with Premier Consulting Group, with our leadership as a service, that's where we can really help, with clients in that aspect.
For those business owners that you speak with on the daily, what will you say to them if they're just reluctant on taking these actual steps that you're mentioning previously?
It's funny, like accounting gets a negative connotation of like bean counters, right? But if you don't know the number of beans, how do you? It kind of helps in your decision making. So the investment, I think for a lot of SMBs, it's just about timing, right? I mean, it shouldn't be forgotten because you're just not going to grow. Like we've met some business owners who, they're doing okay, right? Like making millions of dollars a year. But some of them don't have a CFO. They don't have a finance team. In some cases, the CEO is still doing the accounting, and their mom is doing the bookkeeping. But you got to go past that. You got to make the investment, even if it's a fractional CFO or leadership as a service, as we like to call it at PCG. It's better than nothing, and you need to make that investment in order to get to that next phase.
What would be some of the words of encouragement that you tell that CEO to just let it go, to let someone else handle it?
Well, I mean, as a CEO, like your job is what? The vision of the company and to help grow the company. Mm-hmm. So somebody else should be, taking care of the CFO role per se, whether it's fractionally. And if it's too much to invest in, because it is costly, to have a full-time hire of a CFO. But it starts, with getting somebody in fractionally, maybe at that point.
Yeah.
At least try to get your company at the next level.
Yeah, you gotta let go of some control, and you gotta bring other people in to view and share a perspective, because even if you don't like hearing it, it's important that you at least know about it, right? If you're not financially healthy, if you're not, transparent, you're just going to be limited, right? Like I've worked with some business owners where I've shared feedback, like, I don't think your target addressable market's that large. And it's probably the first time that CEO has heard about that in the 5 years he's been in business. So, bringing other people in gives good perspective.
What was previously mentioned in the newsletter is that they say that many problems with low cost bookkeepers is that they are, quote, transactional without strong accounting or financial analysis backgrounds. What does that mean in practice? Like, what does that look like every day when you have bookkeepers that have a lesser experience?
And a lot of bookkeepers do what's called cash basis accounting, and they just record transactions. And the part about financials becoming meaningful, and a lot of businesses also just take financials out of the box, And when I say out of the box, they don't make any adjustments. They don't create custom accounts. They don't make the accounting meaningful to them. For example, we have a client where he's still using revenue, just one revenue account. So he doesn't understand. I mean, he can go into a lot of the detail, a lot of the invoices to be able to understand, okay, am I making more money in this? Is this revenue stream providing more revenue to the business? But it's hard to do if you're just using one account. So, bookkeepers, they're not going to provide that insight. Even some more junior accountants won't provide that insight. So we have to sit down and think through, okay, how do we make this meaningful for you? And going back to my example about that business owner who's had the best month since for 3 years, from 3 years. One of our next steps is to make that financial that P&L or income statement more meaningful to them. And bookkeepers just aren't going to do that, right? Which is why I say that's kind of like foundational to start, but then SMBs have to move into that next phase of making it more meaningful to them.
With bookkeepers, they don't understand the business. I mean, hate to say it that way, but
Yeah.
they don't understand the business. They're just recording transactions that happened, and like Kim was saying, like with a lot of like QuickBooks or any other accounting software, which most bookkeepers use, they're using the same reports that are just out of the box, and the thing is, like, if an owner wants to get to the next level, they need more customized reporting, that is geared towards their industry and what's more meaningful, like Kim was saying, to them. You can't have one revenue account, per se. You gotta you gotta have that in different departments or whatever revenue streams you have. But yeah, with a bookkeeper, it is like a good foundational area to start. Like an owner should never really do their own books. Like that should just be outsourced.
Yeah.
But to get to the next level, you need something a little more sophisticated that's tailored to your business.
Should the SMBs rely on their financial specialists for any strategic guidance or no?
Typically, when you're going through this growth phase of a company, you bring in low cost, right, outsourcing. And even then, you may get some quick wins, especially on the tax side. You may get some quick wins, but you'll never get that strategic guidance from that talent pool. It's just, it's just the nature of those type of resources. And even moving into the future for a lot of companies, if they don't bring in somebody that's at least a fractional CFO that can help provide some guidance on what to do next, where to invest, they just won't progress. So it's vitally important for a lot of organizations to move into that next phase. And Premier Consulting Group, we have clients that we do that with, and we're working on transitioning them to that next phase of growth. And then the business owners, a lot of them, get into it because they love the business, they love what they do, but they just don't like all this other stuff. And that's okay. That's okay. But you got to be able to hire the right people, whether they're internal or external, and then also know when to be like, okay, this is not going to get me any further in my business, and make the decision to be able to make an investment with a consulting company.
So if I have a bookkeeper, a tax person, and I'm trying to make a business decision, who will you recommend to translate all that into a strategy?
Yeah, I mean, a CFO type person, more senior, that can definitely do that, right? I think a lot of what we do with our clients, we come in with a CFO advisory service under leadership as a service. And usually what happens is within sometimes a month or even shorter than that, they're like, we want you to do all of our bookkeeping, all of our tax. Like, it just helps them to have, one person that they can go to be able to help them with all of those things. And then what we do is we have a team that can help support, but it goes under one guidance, under one person, like a CFO that you should have. But many small SMBs can't afford to do it. So that's why we exist.
Yeah, I mean, it's very fragmented with small and mid-sized businesses. They'll have a bookkeeper maybe, and then of course they have a tax person that does their taxes. But I mean, I doubt the bookkeeper and the tax person really talk. They don't really talk at all. Like Kim was saying, like, if a company is there and they're looking to grow, like they got to make that change. They got to make that change. They got to bring in at least some sort of CFO help, whether it's a full-time hire if they can afford it, somebody fractionally, like what PCG offers, and kind of like streamline everything, more so. So it's less fragmented, it's more fluid. And I think that's just kind of the way, for the business to get to the next level, to help grow their company is having that kind of guidance.
In your experience of working with all these SMBs, what is the most common setup that you've seen in terms of the financial specializations?
Maybe they might have a bookkeeper, and of course they have a tax person because, they're going to outsource that for sure. But outside of that, that's pretty much the picture, and it's always catch up mode with bookkeepers, trying to get the books in order. But from what I've seen, a lot of times SMB owners don't really look at any of the reports because they're not timely. So it's like, what are they exactly looking at, right? To help them, make timely decisions. Because reporting will help you make timely decisions. I mean, that's the way it works, right? So that's kind of like what I see. It's very fragmented, and it's always like, not timely. The reporting is just not timely at all.
You both have mentioned a recommendation if the SMB can afford it is having a CFO, but most of the SMB owners hear expensive and that's not for me. Are they necessarily wrong? What does a CFO bring that other levels can't?
I would say so. CFOs exist for a reason, right? To bring together like everything behind the numbers, provide insight for decision making, right? And also provide strategic guidance for the future. You look at any Fortune 500 company, there's a CFO. And if it's like that recipe can't be wrong, right? Among all of the largest companies in the world, right? CFOs matter. However, getting there, it's different path for every business. And starting off with some fractional work, some consulting work to help support is a good first step until you can hire that person that in many companies, it's the number two in charge, right? Because if the numbers don't matter, they just won't last and won't have the freedom to make decisions, right? There's a lot of businesses out there today that they invest in areas because they make money in other areas. And those other investments may not make money for the business, may not be profitable, but they want to do it either out of goodwill or for whatever reasons for the business. But the financials have to work out, and CFOs will help support that.
Like Kim said, I mean, you got to work towards that if you want to grow as a company. And if you have a bookkeeper, then, it's a good foundational step. But if you are looking to grow, if sales is stagnant, you got to start with at least some sort of level of CFO help. And that's why fractional CFOs exist, and that would be like the first big step, to move, forward. And that's where like PCG comes in. Obviously, we offer those services. We help with the strategy and everything for the company. And then maybe at that point, down the road, things go well, for that SMB, client or person, they could potentially hire somebody, full time, to run, in that role. But you got to take the step, if you want to grow the company, it's not going to grow. You're pretty much flatlined if you don't have any CFO level of service for your company at all.
Yeah. And I mean, even though it's hard, right, to make that investment, especially in the near term for a lot of SMBs, I mean, we're seeing a lot of SMBs that invest in marketing, go to market, all this other stuff, it's great. It's fantastic, right? However, how do you know if it's successful? You get a lead. Okay. Is it at a level of return that you're happy with, right? Are you going to do the analysis yourself? I mean, you shouldn't, right? As a business owner, you should be able to have the freedom to have somebody tell you like, okay, we did great. This marketing campaign, this email campaign was fantastic. Brand awareness has increased, stuff like that. You need marketing and finance to work together. You can't have one without the other. Otherwise, you have a incomplete picture.
Your business's GPS, and most SMBs don't have a strong forecast model. Is that the function of the CFO, or can accountants do that too?
Usually it's a CFO, just because of the acumen that's needed to be able to build a financial model and a forecast. You know, accountants can do it, but again, like a lot of the specialty in accounting and bookkeeping is recording now and recording and getting the past recorded. But really taking that next step, usually somebody with financial analysis background, in the corporate world, it's called financial planning and analysis, FP&A. Usually that team is the team that's really helping support the CFO and trying to figure out what the future is going to look like, especially, you know, in the coming months or the future years.
What does a good forecast, like actual good forecast, look like, and how often should SMBs be reviewing actual results against those forecasts?
Yeah, I'll you know, at least for leading practice, for what I've seen in the corporate world, every month, right? Sometimes it's weekly, depending on the type of business. But you know, what a good model has is typically drivers, right? Drivers that are like based off of like tangible, actionable items, right? Right. Like if you're trying to generate new businesses, you know, how much outreach have you had, right? Have you quantified that? If you don't hit a certain level of outreach, the opportunities won't be there for you to convert. So there's these different things that, you know, I think that if you don't have an understanding, basically from, you know, your month-end results all the way broken down to your daily actions, it's just hard to drive anything, right? And a lot of the multi-unit managers that I've walked in and helped with at like even, you know, retail locations, I'm like, okay, what are you doing today?
Yeah.
Right. They're like, oh, I want my cost of goods sold to be down. Okay. So are you driving that by ordering less inventory, or are you driving that by growing the business and trying to increase your top line? A lot of them are like, I was just going to cut inventory. Sometimes that's the right answer. Sometimes that's not the right answer. And, you know, that's where you need to have somebody with more advanced experience to be able to help tell you that.
Yeah, just from my experience with working with clients, you know, we'll review a forecast, you know, for the month, but we'll look at it weekly, you know. We'll look at it weekly. We'll kind of look at, you know, what they've done in the past. That's kind of how we built the forecast, like what was done historically. And then, you know, how are we going to drive these numbers up? And then we'll look at, you know, on a weekly basis after the previous week's ended, we'll plug in numbers, you know, and this is what the outcome of the previous week was, you know, and we'll kind of talk about it, you know. So it's important to, you know, like Kim said, you need to have somebody that can analyze and really, like, you know, look at the numbers, have some meaning behind it, you know, because at the end of the day, if you can analyze those numbers, if you're forecasting, budgeting correctly, that's just going to lead to your company being, you know, healthier. And you have a plan, you know, you have a plan in place, you know, hopefully to get you to be successful.
I am an SMB making about 2 to 5 million in revenue, but I can't afford a CFO with a 200K salary plus benefits. What are my options?
That's it's not an uncommon scenario. I mean, really, you know, if you hire PCG or, you know, Phil or myself, first thing we're going to do is look at your financials and see where the money is going, right? Because a lot of businesses, the large investments are either in heavy equipment or in labor. And it really just comes down to understanding that, like, why you should be able to afford at least, you know, a CFO that's actually worked in a similar size business. But, you know, we'll need to understand where all the money's going first, and then work on a plan to be able to get you that. So that's something we would do immediately.
Yeah, I mean, it just starts out with an assessment, you know, taking a look at, like, getting an understanding of any pain points that they currently have, and, you know, getting an understanding of their business, what their goals are, you know, and then obviously financial analysis, you know, might be looking at their current year to date, you know, P&L, balance sheets, previous year, just to get an understanding, you know, of everything. And at that point, you know, we would just basically come up with, a business plan proposal over a course of a year or year and a half, broken out by quarter, and that's kind of how we would present it to a potential SMB client that's looking, for fractional CFO help. But yeah, I mean, the starting point would be finding somebody, like you said, FTE is going to be expensive, 200K plus benefits. Starts out at least, bringing in somebody like a PCG or another consulting company that can help with fractional CFO services, at least to get, going on the process of helping the company grow.
Yeah, and I mean, a tangible example to that would be, even if you can't say that the 200K and fully loaded, the benefits would be a lot more to the company. You could always look for up and coming talent, right? And I think what we could also provide to a lot of companies is creating creative compensation structures to help support making it more affordable long term. Also incentivize talent to be hired. I mean, there's a lot of great talent out there, and having been in finance and accounting, I was always like, okay, that's the dream, to get to CFO, right? So there's always going to be that motivation. There's always going to be that talent pool that's available, and just making it lucrative enough or incentivizing some up and comers to join is a possibility for a lot of SMBs.
What is the right time to bring that conversation up to get to that CFO level thinking? And what are the signals that you normally say to your clients, you've outgrown your current setup?
In my perspective, they haven't been profitable or they've been stagnant, typically for a couple of years. That's usually an easy sign to be able to go, okay, we need to change something. And in some of our clients that we've had, especially there's one client I can think of, he's been stagnant for 3 years, right? Same exact revenue every single year. And he reached out to me and we were talking about it. And he's just tired of doing the same thing and not getting a lot of different results.
Those are the big points right there. Being stagnant, like if you've been around for a few years, you're kind of, your revenues, if you're profiting, or not, like if it hasn't changed, something has to change, right? You got to do something, right, to drive your business. So at that point, it would be appropriate to bring in an outsider's perspective to take a look, and to see, what areas maybe need to be like focused on, honed in on, to hopefully, get that momentum going for your business and drive your sales back up, your bottom line's healthy. I think that would be the time to do it. So like if nothing has changed, it's been a while, sometimes you got to rethink how you do things, right?
Yeah. And I'd add to that, it's okay to get outside help, right? And I think a lot of SMBs have a lot of pride in the journey that they've taken. If you take a step back and you look at these Fortune 500 companies, right, making like an insane amount of money, like $50 billion a year, they have like an army of consultants that help them. And, it's not like they don't have good talent. They have all of this infrastructure, all of these people in their organization that are amazing at what they do. However, they're so focused on what they do. And a lot of consultants will come in, share a perspective, either across the industry or share a perspective that's from a different industry that helps kind of cultivate and think through and innovate and create innovation. So there's a lot of positives in bringing in, additional help. And, I think a lot of the SMBs just got to be okay with that. And I know it's very personal, especially when you first hire or you hire your first consultant or even a bookkeeper. And, some owners may be a little bit embarrassed by it, and that's okay. And it's fine. And we were all trying to get to the same goal, which is making your business successful.
Yeah. I mean, a lot of, from my experience too, as a business owner and having done everything myself, to start out, before I started like outsourcing some things, it is kind of one of those things where it is hard to let go, like you want control. This is your baby. This is your, your passion. But it's okay, like Kim said, like sometimes you do need to bring in, if you want to grow, like you can't do everything, right? Like yourself, you have to outsource some of that or bring in talent, to help you. Because at the end of the day, if you're the only one doing everything, there's a reason why you're stagnant, right there.
Yeah.
It's because you've done as much as you can possibly do. But if you want to get to that next level, like you're gonna have to change your approach to some degree.
Yeah, if you're the only person doing everything, you don't have time to do anything.
Exactly.
So I want to ask one final question for those listeners who are listening in and they are on the fence with all the advice that you're wanting to that you're offering for today, and they have not taken those steps yet. What would be your final words and thoughts that you would like to share with them?
I would just say, sit down in a quiet place, maybe notate some things about like goals, where you want your business to be, really think about that. But it's not all about your business. It's also about you, right? As a person, like personal goals. It's not all about just work. There is reasons why people talk about work-life balance, to some degree. So you got to think about what's going to make you happy, what's going to make what you think your business is going to look like in the next few years, or where you want it to be. And then just think about it, how am I going to get to that point? What's going to get me there? And I would say a lot of it would be, might have to look at an outsider's perspective. It's good to get outsider perspective to some degree. And after like an assessment, like if it doesn't work for that person or they're still on the fence, then at least they've had somebody come out and taken a look, right? At least at the very least of what their business looks like, and at least have made some recommendations. That would be my biggest thing is, sit down without all the noise of like running a business and all the chaos that happens with that, and just really think about, what you want out of your business and personally.
I would echo that for sure. I'd also add that, look, every company should have at least a stable of good consultants that they can leverage. And I think for SMBs, letting somebody in, it's tough, and you can always take baby steps into doing that, because I know the word trust comes up a lot. I have there's somebody that I've talked to about that she has a hard time with letting people into her business. And it's definitely something that it's going to be very new for her. But I think if you start in baby steps and finding really good consultants, they can really help transform your business and really get you the results that you're looking for. And also, there are a lot of bad consultants out there. Like, let's just be honest. But I think, as a consulting company, we also have clients that are consultants, which is pretty funny. But we understand the value behind it. And, you can't always get experience, just in your business. You can get experience from all different types of industries, businesses, and then you can use that insight to really help drive your future and where you're going to go. So, whether that's with PCG or another consulting company or from your tax professional, everybody has a specialty, and those things really can help and really take you to that next level.
Kim and Phil, thank you very much for breaking this down in a very practical way for those listeners who are listening and seeking out recommendations on how to grow their business. If people want to learn more about Premier Consulting Group and connect with you, where should they go?
Yeah, we have a YouTube channel. Our handle is @ConsultPCG, and then our website is consultpremiergroup.com.
PCG offers a no-commitment 15-minute consultation to see if they're a good fit for your business. We'll link you that in the show notes. You can also send them your top 3 pain points, and they'll respond with possible solutions. If you found this conversation helpful, please feel free to subscribe for future episodes. Guidance from Premier Consulting Group is for informational purposes only and does not guarantee specific results. All actions are taken at company's own risk.